Two things could trip up this beautiful bull market. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. 2024 should see impressive stock market gains. This would come after a sensational rise in 2023. Stocks, in fact, have been on an upward swing since October 2022. Why will equities do well in this fraught election year? The economy will grow. No bone-crunching recession is on the horizon. That's why analysts are forecasting a nice rise in profits, which are the mother's milk of stock prices. The Fed won't be trying to slow the economy. Indeed, interest rate cuts are in the offing. And the bulls have history on their side. As legendary stock market guru Ken Fisher has pointed out, the S&P has risen 83.3% of the time in presidential election years since the mid-1920s. More heartening, if stocks went down in the midterm elections, as they did in 2022, they have gone up in every subsequent presidential election year, no exceptions. Moreover, investment sentiment is also bullish in this respect. Most people are still somewhat skeptical about the market. As the saying goes, stocks climb walls of worry. The time to worry, the time to get scared, is when euphoria about the future reigns supreme, and we're a long ways from that today. Wise investors, however, should keep a sharp eye out for big events that could upset this happy historical apple cart. One is a major monetary crisis where panic selling grips important currencies and policymakers flounder in response. That almost happened around 2011 when markets were gripped with uncertainty about the survivability of the euro. That was averted only when the European Central Bank head, with the passive connivance of the Germans, bluntly stated that everything would be done to save the euro, including repeated bailouts of the feckless Greeks. Potential trouble was averted in the fall of 2022, when the dollar surged and other important currencies were wobbling. The Fed deliberately halted the dollar's rise, giving a reprieve to other currencies. Unfortunately, central bankers still don't grasp that vibrant economies don't cause inflation. Rather, reducing a currency's value does, usually by creating too much of it. An excellent barometer of monetary mischief is the price of gold, which has risen recently, while the dollar has fallen against other currencies. Japan, for instance, has been able to keep the yen from crashing with tricks a magician would admire. But for how long? The thing is that countries and countless companies have loaded up on unprecedented levels of peacetime debts, kindling for a potential crisis. And of course, most dangerous is the unraveling of the U.S.-led world order that has been in place since the end of World War II. The U.S. has pursued astonishingly feckless actions in recent times that have given rise to adversaries who believe America is in decline and has no stomach, long-term, to resist their increasingly brazen, aggressive moves. This is what leads to catastrophic, cataclysmic miscalculations. So enjoy riding the bull, but recognize that at some point we will have to come to grips with our monumental monetary mismanagement and with a world that is courting military disaster. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and look forward to being with you soon again.